Main Street presented quarterly earnings on the 27th of February, where they missed on EPS and revenue, but the stock didn't move too much, which is kinda surprising because it is said that Main Street Capital is trading at an insane premium if you look at the net asset value. So you would expect a sell-off here, right? Well, more on that in a minute. Because one of the main reasons why people keep on buying Main Street stock is because of the juicy dividend, currently hovering around 7%. And keep in mind that they pay monthly dividends, and they are known for their supplemental dividends. So this begs the question, should you pay a premium for Main Street stock? Let's dive right into it. So right off the bat, total investment income for the full year of 2024 was reported at 541 million, up 8% year over year. The distributable net investment income is up only 5%, so that's something to keep our eye on. Looking at the fourth quarter, we see that total net investment income increased 9% year over year, which is looking pretty good. However, distributable income was reported at 95 million, up only 1% year over year. The DNII margin decreased 540 bps here. Down the line, this results in both a lower NII per share and DNII per share, down 4 and 5% respectively. And earlier in the video I claimed that it is said that Main Street is trading at a premium when looking at the NAV, which for most people is the most accurate way to evaluate a BDC company. It is reported at 31.65 in the fourth quarter. And one of the things that we notice here is that NAV on its own is growing over the years. So that's the most important thing, and not very common in this industry. So this is also one of the reasons why Main Street is trading at a premium. And in this graph we can see it even better. The monthly dividends, the DNYI per share and the NAV per share. Starting with the NAV, the indicator for valuation, which nearly doubled in the past decade, showing the insane growth this company has been through. And it's the same with the dividends, but this graph shows it even better, together with the supplemental dividends, which really add up in the long run. And Main Street is one of the very few BDCs that didn't cut their dividends completely in the lockdown period. Another important thing with BDCs is of course the diversification. And with Main Street it is looking really good. The biggest industry is machinery at 9%, which is below my 10% maximum. And now that we know a bit more about the company, let's check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Main Street is a 5.24 billion market cap company. PE ratio is at 10, indicating they could be undervalued. Later in the video I will show you my 3 price targets for Main Street stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 601 million, and in this graph we see that revenue went up in the long run. Of course we see the impact during COVID, and most recently revenue is accelerating again. Margins are going up and down in the past decades. During the lockdown periods, margins crashed. After that they recovered pretty quickly, and most recently it is kinda stabilizing. EPS is pretty much the same story as the revenue and the margins. Nothing special to add here. Analysis expected EPS will decrease from here in the coming 2 years, something to keep our eye on. For the revenue, analysis expect pretty much the same. And again, I don't see any signs of this actually happening. Especially the 30% decrease feels a bit random to me. Return on assets is sitting at 10%, which is a great number. Return on equity is reported at 18%, which is a great number. This is also one of the most important numbers for Main Street. Current ratio is at 1.7, which is a decent number, nothing special to mention here. And right now Main Street has 2.13 billion in debt. And I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Main Street has 78 million in total cash, so they can't pay down a big part of their debt. To me, this could be a potential red flag. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is at a negative number most of the time. And to be honest, I don't like this at all. In 2023 it was finally reported at a positive number, but as of right now it is at a negative again. Shares outstanding are increasing in the long run, which is something that I don't like in general. But companies like Main Street issue new shares to raise capital, so I don't mind that much. When shares outstanding are decreasing, it increases your ownership in a company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 7%, which is a great number. And keep in mind that Main Street pays a monthly dividend instead of a quarterly dividend. Annual payout is at $4.20 and payout ratio is at 71%, which is pretty decent for a BDC. The 5-year growth rate is at 4%, which is a decent number. They have increased the dividend for 4 years in a row, which is really nice. And if you take a look at these numbers, the dividends paid since 2015, you see that Main Street did increase the dividends at a decent rate. However, during the lockdown periods, they didn't increase the dividends, ending their streak. In this graph we see the expected dividends in 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to go down from here. But overall these dividends look pretty interesting to me. And how about the historical returns? I decided to compare Main Street stock with the overall market, in this case the S&P 500. Next to that I added ARCC and OBDC. On the 5-year chart we see that Main Street beats the S&P 500 by quite a difference. In total Main Street returned 127%. And keep in mind this is including dividends. The S&P 500 is sitting at 110%. And both ARCC and OBDC were doing a decent job, but underperformed both Main Street and the S&P 500. On the 1-year chart things look pretty interesting. Main Street crushed everyone in this list with a whopping 43% return. On the 6-month chart it isn't any different, with again a big score for Main Street with 25% return. On the 1-month chart it looks a bit messy, with Main Street actually having one of the lower returns in this list. But all are at a negative number, so that's pretty interesting. And bottom line, Main Street was crushing everyone in this list, but seems to go down a little bit most recently. So could this be the perfect time to buy Main Street stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. Starting off with revenue growth. For the revenue growth I'm filling in 6, 8 and 10%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 80, 82 and 84%. For the free cash flow margin I'm putting in 26, 28 and 30%. For the PE ratio I'm putting in 10, and for the price to free cash flow I'm putting in 13, 14 and 15. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety with this company this time. And right now Main Street stock is almost at $60. I hit analyze and we see a few green numbers. and I'm more focusing on the multiple earnings value. We have a low price target of $57, we have a mid price target of $67, and we have a high price target of $78. And to me, the low to mid price target is the most justified here. So that means they are kinda hovering within this range. What do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Main Street is that I love the business. To me, it is a high risk, high reward investment in some way. I really love the monthly dividends they pay with the supplemental dividends on top. And most fundamentals look really good to me. Of course, there are some concerns with free cash flow margin, debt and future outlook by the analyst. And of course, the heavy premium when looking at NAV. Other than that, most things look pretty good, and Main Street is the golden standard when it comes to BDCs for most investors. From a dividend point of view, I really get excited, with a high yield and relatively low payout ratio. From a value point of view, I'm kinda excited. As said before, looking at the NAV, they are massively overvalued. But Main Street deserves a premium price in my opinion, and based on the price targets we did a minute ago, they could be undervalued. And as of right now, Main Street is one of the bigger investments in my portfolio. I bought some shares when it was hovering around $50. And due to the massive increase in stock price, my total share of Main Street increased quite a bit in my portfolio. That means that for now I'm not buying more shares. And with everything that is happening right now in the market, I think it is wise to wait a little longer before you pull the trigger. It feels like the stock could come down a bit more in the upcoming days or weeks. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and that did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.